Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London UK feed wheat. Paris milling wheat. Happy Valentine's Day. Paris milling wheat, for a change, is very different from Chicago, Kansas City and Minneapolis wheat. Here there is one dominant pattern, a quite large one, that is coming towards its cusp. It is, of course, the dark blue highlighted late August 2024 to date ascending triangle, which is currently 232 to 241. This pattern has the requisite 5 touches per side, altogether combined on either side, and is made up from a lot of smaller patterns within it, but it is clearly seen on my daily chart. In the past, I suppose even now, the top side has been capped to a certain degree, and most certainly defined at least, by the bright red neckline extension to the June to November 2023 head and shoulders top, which is currently at 238. This is on the verge of yet again becoming a support, as it is today, so please keep an eye on this going forward. Now, I cannot give definitive targets topside or below for this pattern, as we haven't truly broken higher or lower as yet. But I can give some idea of the potential should we see a break higher or lower. Thus, on the top side, a primary potential would be up in the 258 area, with a secondary harder to reach potential up in the 279 area. Likewise, on the downside, we would have a primary potential in the 226 zone, with a secondary harder to reach potential down in the 194 zone. Now, it is the second week of my giving a strong word of caution. We are so far advanced along this ascending triangle that the chances of a false break higher or lower are very, very high. So supreme caution on any suspected move in either direction. Now, if we do break higher or lower, what should we look for? Well, because of the size of the pattern, these would be quite away from the current market, but please still bear these in mind, and they are from the same source. So topside, I'd look to the resistance provided back in May last year from the 61.8% absolute Fibonacci line at 270. Likewise, I look below to the 50% absolute Fibonacci line support, which helped hold up prices in November and early December last year, and eroded the bearish incentive back in August and September as well last year. And that is down at 219. Minneapolis wheat. The market here in the past had been a little different when compared to Chicago, Kansas City, and even Paris wheat. However, not so much this time, though I do see some unique features. This week has mostly seen the market take a breather within a possible late January to date bull channel, come ascending wedge pattern, and that's currently at 628 to 654, with yesterday and today being the resurgence of the move higher that had been here since just after the start of the year. The move up here is not as consolidated as in Chicago wheat, but it does bear similarities. The market has now moved up over the interesting April 2024 low at 635 and is eyeing the November 2017 high at 667 and the 50% Fibonacci line of the May to August 2024 move at 670 that effectively capped the market back in October last year. In the overall picture, much like Chicago and Kansas City wheat, this market here has 2, possibly 3 or more major features that have developed, or should I say are developing in this market. The first and by far the largest is the late May 2024 to date possible very large double bottom pattern. We're at this time constructing the second up leg in this pattern, and the key to the breakout upwards, I suspect, will be around that 50% Fibonacci line of the May to August 2024 move at 670. There could also be the nearby May 2021 low at 676. I'm sorry for being a bit vague here, but this really is a very large pattern. The second pattern is more recent, though still quite big. It is the early October 2024 to date rounded bottom pattern. Here I would look to the May 2021 low at 676 as the final of the construction and the start of the breakout. However, there is an argument for looking at the congestion in late October, early November 2024 in the 620 to 635 area, just around where the slowly declining gold long moving average is situated, currently at 633, as being the breakout point, though I am more cautious and would still favour the 676 area. However, just keep a wary eye out for the 633 area, just in case. Next, we have the bright red bullish shift pitch hawk here for the late August to early November 2024 move. Right now the market is in between the middle time above, currently at 657, and the lower time below, currently at 606, though towards the bright red middle time above. This pattern, in its own way, is supporting the move higher. We also have the market seemingly breaking up through a major resistance last week and now using it as a support. And I am not referring to the gold long moving average or to the April 2024 low at 635. No, I'm actually referring to the dark blue July 2023 to date downtrend, currently at 622, that slashes across the chart. We are now above that significant downtrend and stabilizing over it before moving higher. So what have we in the way above that might change this seemingly significant attempt higher? Well, not a lot. We did have the gold long moving average in the April 2024 low to a certain degree, trying to cap prices, but apart from the 50% Fibonacci line up at 670, we have the near to it November 2017 high at 666, speak of the devil, and a small congestion band 650 to 652, based around the August 2018 high at 650. However, the dynamic rising resistance of the bright red middle time, currently at 657, might be a touch more problematic topside. Despite these, the topside continues to seem vulnerable right now. London UK feed week, and happy Valentine's Day. There continues to be, even now, these many weeks, months even, only one major significant pattern on this daily chart, and that is the bright red late May to early July 2024 bearish shift pitch fall. The market is right now over the upper time, currently at 181.70, though it has as yet not been able to fully stabilize over it. Add to this the narrow mix of all, literally all, the moving averages between 180.5 and 183.40, as well as the 50% absolute Fibonacci line at 180.5, and you have a close together, compacted zone and area that is possibly brewing up for a significant move. I was, as I've said 8 weeks ago and ever since, and I quote, even now still looking for that better pattern to appear, and until that shows up, I will continue utilizing the bright red bearish pitchfork. End of quote. This leads me to my final 4 points, and 3 of them were something that I noted in my recent annual commentary on London UK Feed Week. Firstly, I saw there the potential for a very large May 2023 to date cat's ears pattern. This is a bearish pattern akin to a double top, formed after a big fall such as we had earlier in 2023, as well as an even longer term second pattern, an August 2020 to date very large head and shoulders top pattern. These 2 super long term patterns are still live, and they both rely on one feature below the market, their common neckline, highlighted in dark blue on my daily chart, and it's currently at 167.35. The third feature is a little closer to the market, but a little more longer term. It is the March 2016 to date uptrend, highlighted in purple on my daily chart, currently 176.30. Now, there is one major possible severe criticism of all 3 of these patterns, and that is they have previously been breached and arguably broken. However, I have transposed these from my longer term monthly charts, and whilst on a daily and even on a weekly chart they may be breached and broken, on the longer term monthly charts where they really live, they are still somewhat valid. And so I would not take these as cast iron lines in the ground, or lines on my chart that should be or should not be crossed, but longer term strategic patterns that we should bear in mind and occasionally keep a closer eye upon. Finally, I've drawn today a bright green 2025 based bull channel, currently 182.5 to 188.40. This has some merit, and I would keep a close eye on it as a possible solution to the question of What way out will the market choose from the bright red bearish shift pitchfork? Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.